Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 26th of March. Starting off with the FTSE, which is becalmed just at the higher levels, basically level with where we were back in April last year. Still looking for 80.20 at that June or late May resistance line projection. Ideally, we stay above our previous target there around 78.60. If we break back below 78.60, then it's the initial March 77.90 zone, which may be on tap. The idea that we could follow through on the upside through into the low 8,000s is backed by the way that the 50 and 200 day moving averages are both rising, but obviously we have been here before over the last 25 years. Moving on to the DAX, and here a proper performance from the German market, still edging higher almost daily. The old target there, 17,900, which we were looking for perhaps by the end of this month, has easily been hit. That's become new support, and above that, looking for the top of that October rising trend channel, 18,700 by the end of next month, or hopefully a bit sooner. Worst case at the moment is down to March support, 17,600, but really we're looking for 17,900 to take the strain there. The Dow is the next contender, and here we've come back a little bit from the shock of getting near 40,000. We've got the floor of that rising trend channel from October around 39,200. Hopefully that will stem any losses. Worst case at the moment is the 50-day line, 38,600 as a potential support point. If we trade higher, then the initial target above 40,000 is 40,400. That September resistance line. Best case by the end of next month, 41,300, a rather unlikely sounding target, but that is the top of the October rising trend channel that we're currently in. Moving along to Bitcoin, which had a bit of a boost yesterday from news regarding the LSE. Here we've got the market breaking through that hard right shoulder, 68,000. That's the old record high area from 2017. Above that, we're now looking for a relatively quick break of 74,000 and well, just under 74,000, the record high, and heading up towards 81,000 by the end of next month, which is the top of that rising January trend channel. Obviously the end of next month quite key on a fundamental basis, given that the last week of April will see the halving occur. Moving on to gold, and here a bit of a spurt that we had back in last week, basically towards the 2250 zone. We're still looking for 2280 while we remain above 2150, which is basically March support, or late March support for this market. Good to see this market now consolidating well near the 2200 level, meaning that 2270, 2280 seem to be a viable target over the near term. If we break down below 2150, then I suppose it could be down to 2100 in the 50-day moving average area, just below that, but looking up at the moment rather than down. Moving along to the stocks, and not that many. We seem to be already in bank holiday mode. Nice V-shaped bull flag breakout for Capital Metals, and the share's been on the front foot really since that multiple rebound off the 200-day line at the end of February, beginning of March. Looking for 6.5, 7 pence by the end of next month, maybe the top of that channel, a little bit higher than I've drawn there, up to 7 pence by the end of April. Ideally we stay on the right side of 4 pence, which is recent support. On to Kodal, where I was willing the shares to get up to 0.55, the best so far today, 0.52.5. But the bounce, or the idea of a bounce, was in place from much lower levels, so the mid-30s, so it's not actually a total failure. Ideally, we stay above the 200-day line at 0.47 on an end-of-day close basis today, and then head up towards that 0.55 zone over coming days. But obviously, today's news has somewhat muddied the waters. Moving on to Manx, and here the shares doing what we wanted them to do, which was head towards the top of that rising trend channel from back in September 2022. It's a very old channel there. The upside here up to 35 pence by the end of next month, while we remain above recent 23 pence resistance. So maybe that one for the slower traders or investors. Orosur mining doing well as well, bouncing off that falling support line there from November, and finding support above the 50 and 200-day lines. The initial target here, 4.9 pence, hopefully over the next week or two. Best case by the end of next month, up to 7.4 pence at the upper parallel of that broadening triangle from August last year. But the key here is staying above the low 3p zone. On to Pebble, another slower one here, the Pebble group, and here we've got this rising trend channel base in the 200-day moving average around 77, 78 pence. We're looking for that by the end of next month, while we remain above recent resistance and support at 64 pence. Worth taking a look at Premier African just to see where we are in the landscape here. Rising trend channel base. Obviously we failed below the 200-day line, which is not a great signal. In fact, 3 or 4 faders there, so that does warn us that the shares may be in a sort of lasting bear mode. But what is interesting is that we bounced off that uptrend line there from December quite well, actually, and the view here is that while we're above 0.2, we could at least head back up towards the upper 20s, maybe up to 0.3 pence by the end of next month. But obviously still a bit of a brave call on that situation. Speaking of brave, the bulls have had to be brave with SkinBio over the recent past, but we have broken, or at the end of last week we broke that resistance line there from back at the end of October around let's call it 7.8 pence. End of day close above the initial March resistance and the 50-day line at around 10 pence. Could take the shares up to as high as 16 or 17 pence at the 200-day moving average by the end of next month. And some nice bullish divergence occurring there, so the slightly lower lows but higher RSI trace helping out. Finishing off with Unicorn, and here we've got a wide rising trend channel after the unfilled gap to the upside. It was a bear trap gap reversal. We've held the top of that gap at 5.5 pence, which is very encouraging, and above that looking for up to 12 pence by the end of next month, or even sooner, which is the top of that rising trend channel from the end of last year. That's it from me today. More updates tomorrow.